Okay, good morning, everybody. It's Wednesday, February 16th, 2022, and we're going to do what we do every morning and do our pre-market analysis on the S&P 500 futures market. Yesterday was just another one of these days that we've been having. The last few weeks have been quite, what's the word for it? Great unambiguous, very ambiguous market, right? So basically just kind of chopped around up and down all day. And it looks like even going into the end of the day, I'm done with the charts by 9, 10 o'clock in the morning Pacific time. So didn't really look at any of this, and it looks like we just kind of bounced around all day, up and down. So not really an ideal market, but plenty of opportunity for scalping and plenty of plays you could have done and still made money. Just not the most ideal market. Now, let's see what happened here coming into the overnight. We continued to chop around. The bulls tried to break out, so we actually pushed and got a good, let's say, 10, 15 points above that previous range from the day before, from yesterday, and then it just kind of fell out. So we came up. There's actually a whole bunch of bearish divergences off that overnight high. And here we are back to the middle of yesterday's range. So I think this is a little clue that we're going to go ahead and start checking lower now, because that was an attempt to break out and just kind of an absolute failure there, right back to the starting point. So let's go ahead and start checking everything out. We'll go up to the ultra high time frames. Not going to say much up there, so we'll skip through all that and we'll get down. Again, I want to mention this potential weekly bullish divergence. I'm not telling you right now that just because I see this, we're going to get some type of major push to new all-time highs. I'm just watching this, and so far, it's still holding. And so I don't know. Maybe this is going to lead to some type of attempt to break out. But even though yesterday we got the breakout from the previous daily range, we still haven't made it all the way back up to that major resistance point that we spent a lot of time highlighting, 45.70 to 45.80 up there. Um, so let's go down now to our daily and start taking a look at what's going on for today. So again, we've mentioned holding 38, holding 50, and now we're holding the 61.8. Again, pretty much to the tick. And so now here we are attempting to come up and retrace the leg down, that rejection again from 45.70 to 45.80 resistance zone up here. So looking at this morning, we had a really strong attempt to break out yesterday. Well, that bar looks like a nice strong attempt. If you were there trading yesterday, it was basically up and down. But you can see we came down into that expected support, came out, and got a nice kind of close to that daily bar. So it looks nice and strong. Everything looks like we're going to get some follow through here, kind of like what we had back when we first bounced off the 38. So I mean, there was a day of indecision, but eventually we started getting some strong bullish bars. So that's kind of what we're looking at the moment. And what am I noticing here on the current daily bar? If that was to close the way it looked right now, or if we continue to stay down where we are, maybe even come down lower, that to me looks like a pretty bearish looking indication. The thing is you have to remember this is like a 5 minute bar opening, and we're looking at it in the first 5 seconds. There's still 4.5 minutes left, right? So this is, or more than 4.5 minutes left on this. This is the beginning of a daily bar that is not going to close until the end of today. So a lot could change. They could just start pushing and we will no longer have the wick, but I am watching that right now. I don't think there really is any type of divergence argument currently off that high, and even if there was, we would have to wait for the end of the day before we really, rely on it. And so that's all I have here on the daily. We're holding the 61.8 of the leg, somewhat of a bullish argument, and trying to bounce out. So we'll have to see this morning as we dial down to shorter time frames what we're seeing off of the high. One thing I can tell you is we came up and essentially failed right off of this marked level all the way back from that major swing low back in 2021. So we kind of came up, it failed just a point or two in front of it. So again, from a structure perspective, would make sense for there to be some trouble there. One other thing I want to leave you with from this larger perspective is just like we're holding this, and I said this yesterday, just like we're holding the 61.8 of the current attempt to bounce out, we're also holding the 61.8 of the sell-off. So we sold off, tried to bounce back up, and could not get through the 61.8 on that side. So just like I said yesterday, we've got this box here, and staying below there is going to continue to kind of hint at a bearish market. Getting below the swing low we made just a few days ago would then open us up for an expectation for much lower. We do have that deeper retracement level right around the 70 and then right around that 75 that we do see sometimes end up being very, very relevant. So I guess technically we could still have a little more faith in the bulls even if they come down lower. But that's kind of a major dividing line there. So we'll be watching that. So let's go down now into the intraday time frames and take a look at where we're at. Now these boxes, unfortunately, I have to continue to kind of move them over here, or else they get overlapped with price. So let me just fix that. Okay, so yesterday when we came up and we made these highs, you remember I told you while as we were trading, the market was kind of, and we could probably look at it here on the 512 so we can actually see the detail. But where's the open? So the open's here. We came up and I mean the best trade of the day might have been just taking our eye level short. It came up maybe a point and a quarter against you and then got, you got the entire range if you held on down into VWAP. That was basically the range of the day. Anyway, I digress. So we were looking at this and we were slowly coming up. And I told you on this, even on the second test, but when we got to this third test, that I was very, very skeptical of a bullish breakout, some type of push above this level to get through the high of the overnight session at 86 or 68 and to continue to go. I was very skeptical. We started getting a lot of bearish clues up here, and if you look now at the 4 hour, whoops, should have just should have minimized that, unmaximized. Coming back to the 4 hour, these are those highs as we were pushing up there. And I told you in real time I was monitoring the higher time frames and some of the intermediate time frames, and we were getting a whole bunch of bearish clues. So you can see up top here, this is the candle that closed at 7 a.m. So we would have been trading within that candle there at the open. I noticed that we were much lower in RVI, even though price had pushed up from down at 44.20 here all the way up to 44.60, 44.70. So there was a 4 hour bearish signal, and then later in the day we pulled back. We came back up towards the basically closer to the close, and the 4 hour printed another bearish signal. So yesterday, all these attempts to break out, I was very, very skeptical of. And then in the overnight, what they ended up doing, and you guys know how often this happens, where we have a beautiful alignment of a setup, a beautiful level, and they pull back from it, and it looks like it's going to actually follow through. Next thing you know, they're ripping right back to your entry, and you're like, what the hell's going on here? They rip through it, and then they fail and go exactly where you expect it to go. So I think this is another one of those situations. A nice, clear 4 hour, very high time frame, very strong signal. We get a double signal. We get the pullback, and then bam, they whip it up in the overnight session. They maybe take out some of those sellers from the overnight or the previous daily high, and now here we are correcting lower. So, and the thing is, I'm noticing on the 4 hour, there's actually what I would have liked to have seen here is this actually push up like this, but the RVI to actually make a lower high so we could get a nice clean 4 hour bearish divergence, but we didn't. So that kind of stung this morning when I looked and I saw the peak up and I came down here and I was like, oh, we didn't get the confirmation with divergence. But again, you don't have to have it, right? Just because there isn't a daily or a 4 hour divergence doesn't mean the market isn't going to have some type of appreciable pullback or bounce that you can make money off of. So, doesn't have to be there. Doesn't mean it's not going to continue to pull back. But that's what we're seeing on the 4 hour here. We came up, we held the smaller leg here. I don't want to confuse you. We've got the major leg down, we've got the major leg up, and then we have the small leg right here. So if we zoom in to the small leg, when we rejected from 85 and came down and found support right off of our expected support zone here, that I'm, beating my chest over because I've been emphasizing it for so long, came down into that, bounced out. So that leg right there. So we're holding just around 50%. Yesterday was beautiful because we actually held the 50% right around that open, right? So we came up. Another reason being skeptical of the bullish push was finding all that resistance around the 50%, right? So we're still basically holding it. That right there is just one of those probes. We see the market do it. Doesn't matter where we are, doesn't matter what signal. A lot of times they do that probe and they take a bunch of people out and then go. So we're holding 50% of this smaller leg that's inside of the larger structure here. And we do have, the 4 hour on down has bearish signals here. It's just this little peak above where we don't get the 4 hour. So I think the 4 hour bearish signal from here is still valid. That was just one of those things the market likes to do, right? Come up, take a bunch of the sellers out who saw all this going on here, and then take it. So let's go down to the 60. 60 does have a nice clean bearish divergence from the overnight high. It also has agreement with the highs from yesterday. I could probably clean that up there. Everything to me looks like we're probably going to be pulling back. Again, just based on holding 50, having all the bearish divergences here, having this peak above and fail formation. Remember, we look at peak above and fail. You can see it on a tick chart. Remember, these candles are sometimes 1 or 2 seconds. You can see peak above and fails just like this, coming up, making a higher high, getting a divergence, getting the larger pullback there. Now, there was no follow through to retrace the whole leg, but that's a nice peak above and fail. What else? You can see it really nicely on some situations like this. A nice little, see how it's just a little wick up, and then you look to the divergence there, and then there you go is the failure. That's basically 545 compared with 550, so a little 5-minute range there on this chart. You also see it on our higher time frames because of the fractal nature of the market, and I think this right here looks pretty much the same as that structure I just showed you on a tick chart, and this is a difference of almost an entire day. So I think the same patterns going on. Of course, you cannot ignore that the bulls could jump in and go ahead and start chugging. If something like that happens, we'll have to adapt and go ahead and follow that. But right now, that's kind of what it's looking like to me, is this little peak above and fail. So we can expect the deeper retracement. Now, the question is, at what point are the bulls going to jump in here and get some kind of bounce? And that's what we're going to have to look at here on the pullback. So real quickly, what I want to do is just make a case for the levels we have above us. The cool thing is there's really not a lot of work involved today because we basically lined all that stuff up on Monday, and we're still really not out of Monday or Tuesday's range. We did get the peak above, but we're back right inside of yesterday's range and could even be back into Monday's range, by the beginning of the morning here. So above us, remember we have that 96 super relevant level. So just beware if they end up getting a bullish push. We've got 96 up there. It's the 61.8 retracement of the whole leg. Just like it came up and held the 38, came up and held the 50, coming up and holding the 61 wouldn't be surprising. If they continue to chug through there, there's a major swing low here that I do think actually got a nice breakdown below and come up to test one time, but it's still sitting there, and we never actually came up and cleanly came right into it. So that swing low there is 45.1250. I think we might actually have Okay, we don't. We have one at 09 and one a little bit further up. But right around 1250 here, That to me, and actually I highlighted it yesterday. So we said there's 1250 is the swing low, but then 1450 was that really relevant resistance level going back all the way February 1st. We couldn't get through 1450. We got some bouncing and some minor resistances in here that you can't see on a 60-minute. And then remember last week, or now I'm getting these weeks mixed up. This whole little thing right here, I have all these weeks mixed up. So I don't know if it was 2 weeks ago, a week ago, but we kept coming up and we could not get through 1450 all week. In fact, at the end here, we came up to 1450, we pulled back, and then came up and broke it, pulled back, bounced off of it, and started this bullish push above it. So that 1450 there, again, is still relevant. We haven't come back. And a little bit further, I mean, the eye levels at 27, we know how well these levels work. And then from there, it's basically, in my opinion, basically a smooth sail. If once we get above 27, we've got a nice little 50-point open area here that there will be some relevant levels in between, and I'm sure we have some eye levels in there. But it looks like a nice clean shot, at least up to the 60 area, 45, 61, maybe 62. So there might be, this is the only other level I'm seeing from this higher time frame that might end up giving the bull some trouble on this push above 27 to 78, or I guess the high's up at 86, right? So let me mark that with the dotted line, just so I have it on my chart visually there. And then from the 60-minute down in this area, so we've kind of covered everything above us. If the bulls end up getting some type of strong bounce and they can get through the overnight high, we've got 96, we've got 1250 to 1450, we've got 27, and then there are some levels in between here that we might have some prediction points and some minor eye levels, so those will be relevant, but the larger perspective getting through 27 opens us up right into 60, 62, and then 78, and the high at 86 and 85. Now let's talk about what's going on below us here. So what I might want to do is look at the 30-minute chart. I think the 30-minute has all our major eye levels on it, and it has the major prediction points on there. So let's go down to the 30 and start look at what we have below us in this pullback. And I move the tick chart one more time. So let's look at the 30 here. And I think what I'm going to do is okay. So here's the thing. We've got the major leg itself. So the major leg is that low we bounced out of back on February 14th. That was the major turn in the market there. We hit that 45, 43.54, never came back and got the turn and this push higher. So we've got the larger leg, and the 38% of the larger leg brings us just into 44.33. Now I don't see much on my chart, at least from this perspective, that gives me a lot of alignment there at 44.33. Not much really sticking out to me. There was some resistance back here. But I'll tell you what's kind of sticking out to me. The thing that's sticking out to me is the 50% retracement here of the entire push is right into this swing high. What is that? 44.20? What's the high there? 44.20 quarter. So basically 44.20 down into 44.15 here. I know, again, it's a 5-point range, so I'm not giving you a nice little half point, 1 point, or a single tick for you to play off of, but it is that little 5-point range there that sticks out to me. So we have that, and then we have the major swing high at 44.28. So again, you have to keep in mind, remember yesterday we said if we pull back, we're pulling back into a shitload of stuff. Well, it hasn't changed. We're in the same range as yesterday. When we came in for our pre-market here, this is what we saw in our chart. And you should recall back to yesterday's pre-market, we already talked about a lot of these pullbacks and retracements and all the crap that's down here. There's just a whole bunch. So again, pulling back here, I just it's hard for me to really give you one or two relevant levels to the tick that we can have confidence that we're going to get a bounce from because there's just so much down here. But I do like that little range, 15 to 20. That swing high is 28, and there's just so much here. The 38 retracement, just because it's the 38, could be the one. 28, that major swing high back here, also kind of looks interesting to me. Again, the problem is it's just there's so much shit here. Let me go get this line copied down. So I'm gonna put the line over here across this swing high. You never know, off of 28. And then of course there's 50% of the previous day, just a few ticks below that. There's two tight prediction points in between those. It's just a total mess. So what I would tell you is it makes sense if we can find a short in here to go ahead and jump in short and jump and take profit in front of some of these levels down here. I don't even want to spend too much time. It's the same levels from yesterday. If we just zoom back, we talked about 15 to 20 in here. We talked about down around 98. We've also got this swing high at 4,400. So there's like an area around 98 to 400. But then the 61.8 is also 4,403. So it's kind of like a 5-point range right there. And then if that doesn't work, we're down to the previous daily low. And then if that doesn't hold, it's right into the two prediction points and our eye level. I wish it wasn't this messy, but it is. The other thing that's sticking out to me is this major swing high right here at 44.1075. So again, I know it's a shitload, but that level right there also looks kind of interesting to me. So that's what we got this morning, guys. Pulling back into areas that I would rather not pull back and trade in, but we just have to take it as it comes. So for those watching out there on the YouTube, have a great day. We'll see you tomorrow.